Have you ever stopped to ponder the origins of the stock market? Who were the pioneers that first dared to gamble their fortunes on the unpredictable ebb and flow of public companies? Let's delve into the annals of history to uncover the birth of the stock market and its earliest investors. Our journey begins in the 17th century, in the bustling trading city of Amsterdam. The Dutch East India Company, in an innovative move that would change the course of economic history, decided to sell shares of their business to the public. This was done in order to raise capital to finance their expensive voyages to the East Indies. This marked the inception of the first stock market, the Amsterdam Stock Exchange. The concept was simple yet revolutionary. Individuals could now buy a piece of a company, becoming partial owners. They shared in the company's profits and losses. These shares could also be bought and sold, giving rise to the secondary market we are familiar with today. It was a game changer. The first investors were largely merchants and businessmen. They saw an opportunity to increase their wealth without the risk and effort of launching their own voyages. But it wasn't just the wealthy who jumped at this opportunity. Even the average Dutchman could buy shares, making the Amsterdam Stock Exchange one of the earliest examples of a democratized financial system. As the idea spread across Europe, stock exchanges began to sprout in Antwerp, Paris, and London, each with their own unique characteristics and rules. The London Stock Exchange, founded in the late 18th century, became one of the world's leading stock markets, a position it still holds today. In the New World, the Philadelphia Stock Exchange emerged as America's first stock exchange in 1790, but it was the New York Stock Exchange, established in 1812, that would grow to become the behemoth we know today, the largest and most influential stock market in the world. The invention of the stock market was a watershed moment in economic history. It allowed companies to raise capital from the public, giving ordinary people the opportunity to share in the profits of large corporations. The first investors were brave pioneers, willing to risk their wealth on the fortunes of others. They laid the groundwork for the modern financial system, where anyone, regardless of their wealth or background, can invest in the future of a company. In summary, the stock market was born out of a need for capital by the Dutch East India Company in the 17th century. It evolved from a simple mechanism for raising funds to a complex, global system for trading shares. The first investors were a mix of wealthy merchants and ordinary citizens, marking the beginning of a democratized financial system. The journey from the bustling trading floors of 17th century Amsterdam to the digital trading platforms of today is a testament to the enduring appeal and importance of the stock market. It's a story of innovation, risk, and opportunity, a story that continues to unfold as new investors join the market and shape its future.